All right, so we have been churning sideways in this range. It's sort of moving higher. I mean, we're sort of channeling upwards. But if you notice where the high of this overall range has been, there's this prior transition. In another lesson, we were looking at a move down here, and the risk to get into the trade was just insane. It was like 3 points to stay on the other side of the volume weighted average price. That's just not going to make sense. So so after that, we just started moving sideways, and you can see what we came up and checked it here. That's basically at the same level, and then here. So the 73 transition seems to be the upper edge of this. So normally I wouldn't just say, particularly after watching it slowly creep up and dip back over, I wouldn't say, oh yeah, as soon as we get through 73, then I feel like we can go long. But we have to take it for where the points on the chart are. And right now we've got two very clear points. We have this one here, which is obviously where we're holding now, and then we've got the one up above. And we really don't have, I mean, I guess technically there's a breakdown through this prior, well, we're going the other way now. Let me just draw this out. I want to continue the thought without worrying about where the market's going, because otherwise it won't make for a decent lesson. So if we can trade through 73 and know that we've got up to 77 to do it, we know we can match the risk to reward, right? If we've got, let's call it 4 points to work with, maybe a little bit less than 4 points, then that means that as long as we've got something smaller than 2 points as our stop, that we can make that work. And really I'm looking for, 5, 6, 7 ticks, at the most to risk anyway. Let's see, on the downside, we really would have to clear all of this. And this is an interesting scenario because you've got this period that doesn't appear to have any volume at the low. So let's put a profile on that and just see what this transition looks like. Yeah, so even including these two periods, really you can see all the volume is, and that's what held prior, right? So the volume is really here. So I'm going to just drag this back a little bit. And you can see, look at this little shelf that was really propping all of this up. We tested here and we tested here. So that's the area I want to look for on the downside. But anything to the downside, we've got to be very cautious about, right? It's not as cut and dry, because I just got messed up there. And what I mean by that is that here all of the volume is up at the upper tip of this. So it should be very easy for us to really use that transition as sort of the boundary of what, see, it falls exactly where we were talking about. To the downside, yeah, we've got this boundary of volume, but we even traded a little bit below that, right? So you could make a case really that, let me see if I can draw another line here, that this is really the, where you've got to have everything break through. Looks like this one's off a little bit. There. So we can't get excited about going short just because we get past 68. We really need to be trading through this 67 area, because that's where the bottom of the value area of volume is. And to the top side, well, and of course to the anywhere below that, we're wide open. So that'd be great. To the top side, we've got a very logical, clean target. So that makes for easier risk to reward analysis, right? I know that if I'm going to get probably 4 points out of this, that I need to have a stop smaller than 2, right? That just sort of, it's an easier strategy to come up with. Yeah, look, we are challenging the lows here. So we really need to see some volume print down around the 66, a little bit lower than that. But what we should do right now is get a swing profile on this, because it does seem to be moving. And whenever I place a profile like this, I always want to just look at it and make sure I'm not trading completely on the other side of the VWAP with volume. You can see this one volume cluster falling right where the VWAP was, as we lifted back up. I'm good with that as the starting point. I want to include this volume in my trade, right? Because none of this has been unwound, moving back up, making new highs. So from this transition where the seller came in after here and said, no, we're going to start driving back down, I'm always trying to find the highest point that I can in the swing. I can't go back to this one because all of this volume is going to be on the other side of the volume weighted average price. So we clearly unwound this coming back up, but I can use this high. And actually, let me get back one more. That's really the high. So we've got the high coming up in, the seller pushing into it. So I like the way this is coming together. Little bit of volume down here. I'd like to see us, charge lower than that. I feel like right now we're just holding the edge, so I'm not quite ready to put on a trade. Ideally, I'd like for the CWAP to be down a little bit lower so that I'm using this transition, all of these as my stop. So hopefully I don't miss something, but you got to have a process. If you don't have a process to do it, every trade is going to be a complete nightmare for you. You're going to have mad anxiety about trying to get in too early, or did I miss it, or am I going to get stopped out? And I'd rather just follow a process and allow this to really prove to me that we're breaking down. Okay, so we start moving lower. I'm going to go ahead and get an order in. We'll just sort of manage it as
order pending
as it comes. So right now the entry is sort of on the edge of what's kind of reasonable. We can see the volume here. Our stop would be on the other side of it. So I like this. I'm confident in the follow through of this move back through the volume through the low. So I like where the entry's falling. I like where the VWAP's falling for a stop. Anywhere across 68, 69. I like this. Okay, right at 67.50. So just bump this down a little bit in front of we're hitting it, in front of the CWAP, and see if we can get the fill here upticking. Love the way this is coming together. Nice small stop, none of that gigantic stuff like we had in the last lesson where you're looking at multiple points to get risk off the table. That's no good. This is tight. This we can get just a little bit down below here. Got to get filled, but
order filled.
Boom. Okay, so let's first move the stop. Now let's get our risk to reward cooking. Entry, stop. Boom. There's our 2-to-1 right there. So really not far at all. What, 10 ticks? So we've got 10. Let's go 3-to-1. And let's go 5-to-1. Really simple process. All right, and we're all set. So we can pull this off, keep our chart nice and clean, and see if we can get this to move. Nice tight stop. Love them like that. Love them like that. Okay, stop improves a little bit, so we're just down to 4 ticks here, waiting for this to do something. Hopefully come crashing in.
Target filled.
Okay, first 2-to-1 is taken out, so that looks good. Stop only 4 ticks now, so we've already put more in than we can lose. So all the risk is essentially off the table for this trade. Clearly, we'd rather have it continue running lower, but if it came back against us, that's why you can trade really. I'm not going to say stress-free. That's sort of a bold statement. But without so much anxiety, because once you've taken that first portion of your position off, and you know that your stop is going to continue improving, then there's nothing to be anxious about. All we can do is now sit and wait for the market to produce something. Either the volume that comes in after our trade is going to help us, or it's going to work against us, and there's nothing we can do except protect that position once we've executed it.
Target filled.
Okay, so we picked up the second target, which is 3-to-1. Stop is now, you can see, at entry. So we have one contract left. There's nothing at risk. We have 2 contracts at 10 in the bank, 1 at 15 in the bank. So we've really done well with a trade that, as you can see, it's not even. This isn't some gigantic trend. It's not running points and points and points, but with a very nice calculated entry, very small potential stop, utilizing the structure of the chart to really match that up and make sure. Just compare this to the last lesson that I did, where we had a 3+ point stop on a move down. The amount of distance that the market has to move in order to capitalize on that is ridiculous. So when you have these opportunities with a tiny little stop like that, that's what you've got to take. Really makes all the difference in the world. Okay, so I want to start working on maybe some more advanced concepts about how to manage a trailing stop. If you've been following along in the lessons, I've always been very focused on my stop sort of making sense along with the structure of the chart. And so if we take a look at where we're trading right now, down at 63, and we've got a stop up around 67, so that's 4 points worth of I'm not going to say risk, because it's not really risk, but it'd be throwing away 4 points of profit if the market turns around and comes right back. And that's fine, right? We're looking for a big swing in the market. This is still moving down, so that's good. So I'm not overly concerned about the point value as much as I am where it falls. And if we look at where the stop is currently falling, just because I'm using the mathematical VWAP, well, it's really at the top of the volume, right, for the move down. In other words, the stop should logically either be behind this or behind the next level down, right? Putting a stop right in the middle of a key support or resistance level doesn't make a whole lot of sense. So this is where you can start to manually make adjustments. And my advice is to always adjust towards the market, not away from it. Don't make your stop bigger than it should be. So let's look at what else is on the table. Well, we have, this is the next point of support. This is where the seller was struggling to get down. So if we put a profile on that, and you really don't even have to profile these. I mean, I think you could probably figure that one out. Hang on. Now our VWAP moved down some too. Now it makes sense that anywhere sort of around this 66 area is going to be significantly better, right? I'll just move it down. Now I'm on the edge of value here, right? Could we come back up and just touch the CWAP again? and create a continuation. Well, if that's a significant concern for you and you're looking to get more out of the trade, how far away is our target? I guess that's a good question. So our target's close, right? So we get another couple of ticks and this trade's over. So I don't even have to worry about it. But if we get down here and we can't get filled and we move back up, the question is, do I want to be all the way up here at 66.75? And right now, because of where the VWAP falls, my answer is no. Right? I'd rather get just a little bit more out of it. God, this is lifting back up. Or we could even take it lower, and we could have used this right here because this is the next advance. So really this shouldn't be getting penetrated, but it looks like it is. So we'll just leave the stop there at 65.75. Hopefully that doesn't just come up and tap it and turn around, but that is the next logical place, right? This is where the market should stop. And then after that, the next place that the market should stop is somewhere up here around 67. So it doesn't make any sense to have my stop, a full, let's say, 5 or 6 ticks higher. I guess technically it would, with the VWAP, it would be 66.50, but that falls right in the middle of where that volume is, and I just don't see that as a good place. I'd rather have it higher than the VWAP or lower than the VWAP. And so these are some of the advanced concepts that you've got to start working through. And if you just want to keep it completely simple and just say, look, the only thing I'm going to do is just use the volume weighted average price as my trailing stop. That's perfectly fine. But we did see earlier in the day this potential short opportunity where the VWAP and the CWAP were a long way away from each other, right? So if your VWAP was still tracking up at 68, man, I mean, that's a lot to give up, to give up 6 points worth of the market pulling back just to get taken out of something. So, yeah.
Stop filled.
Well, and we get picked up there. But I'm happier getting picked up there than I am at 66.50 because I guarantee you it's going up to 66.50 if it's going to trade into this volume here. Right? This is the next place that it should come to. So if all it does is hold at 66.25, I'll be very, very surprised. I'm going to zoom in on this and we'll see. Okay, so we can see here we would have been taken out anyways. So I'm not saying that we did something brilliant by moving our stop, but by bringing it down, saving ourselves a little bit extra. And a lot of that is just understanding that when your stop falls at a key point, you've either got to get behind it or get in front of it to the next level and protect your profit as much as you can. We missed our 5-to-1 target by 3 ticks. So that's unfortunate, but that's going to happen. And so the question is, do you allow it to come all the way back? And if all you're looking for is utter simplicity, then utter simplicity is move it back. If you're going through these lessons and you're trying to get better and learn and really understand how, as we always say, what makes the market tick? Where's the market trying to go? How good of a job is it doing getting there? Once it gets through one level, we know the next place that it's trying to go. And so the question is, do we just give up extra ticks just because it's easier, or do we embrace this and say, I'm going to take responsibility for it, I'm going to try and learn, I want to start to really learn how to place things on the chart so that they make sense. And my hope is that that's what your objective is. Otherwise, it's probably not the right career choice for you. So anyway, with that, we'll move on to the next lesson. But I think that was a good, that was a very solid breakdown. It's unfortunate that we missed our 5-to-1 target. We really didn't have anything to work off of. There wasn't a prior low or something that we could sort of use. So it's unfortunate that we didn't get there, but all the same, it was a good profitable trade. Easily picking up the 2-to-1 and the 3-to-1, and then getting what looks to be a little bit more out of it. Probably another 7 ticks out of it on the last piece of that. So pretty nice little trade.